Hello, friends. Welcome to today's lecture. So, grab your pen and your pad and let's get started. So, today's lecture is going to be about key participants in trading and what we trade. So, the people who mostly participate in the Forex market, the foreign exchange market, are usually large institutions. Um, Retail traders, that's those of us who are doing it to make money on a low scale, we make up a very, 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 very small minority of the daily transaction in the forex market. So we have commercial banks, we have corporations, we have central banks, we have hedge funds, we have money transfer companies, we have businesses, asset management companies. All of these organizations involved in foreign exchange transactions. So commercial banks, they provide a lot of liquidity and are the backbone of the foreign exchange market. They trade to hedge and speculate on behalf of their clients. So hedging is hedging is when you place a counter bet on something. So for instance, you place a buy trade on one currency and then you place a sell trade on another currency such that regardless of the outcome, you'll be safe. You will find, if not exponential profits, but something reasonable, or at least it's going to be break even. So that's what hedging is all about. Corporations, any company doing business overseas that engages in the forex market, often daily. I think I have given this example of, I think, Dangote. If Dangote is going to buy anything that does not exist or that cannot be made in Nigeria, even if it's buying it in parts. So if a company is buying anything from another currency, usually they have to first exchange. And like I said, foreign exchange transaction is not just done to make profit. It is foreign exchange, it is currency exchange. So the bulk of the foreign exchange transaction that happens in the world is not done for profit. It is genuine exchange that corporations, individuals do of their currency to another currency for a specific purpose. It's either to go and spend that currency in that country, it's either to purchase things. It is not for it is not for profit making. Those of us and the corporations that do foreign exchange for currency for profit making make up a very small minority of the overall foreign exchange transaction daily. So we have central banks. Central banks are in charge of managing a country's economy and money supply. Part of that involves altering how the national currency is valued. So consequently, the more of a world reserve currency that you have, the better your currency seems to be. And the currencies that are renowned today are the British pounds, the US dollar, and the euro. In order of importance, it will be the US dollar, the euro, and the British pounds. The federal government of Nigeria usually offers something called an euro bond. So an euro bond is a government-backed bond that is guaranteed for payment. An euro-backed bond is not necessarily, they call it euro bonds. It's not necessarily euros. So basically, what it means is the federal government's issuing bonds or asking people to give give in their money, usually foreign currency. It could be dollar, it could be pounds, it could be euro, and the government uses it to do things in the country. That's one of the ways that government makes money. Is a debt instrument. There's a promise to pay after a certain period, usually over a year and multiple years in many cases. So the central bank certainly has a business in holding reserve currencies or holding valuable currencies all over the world. The idea is that the US dollar before the Bretton Woods decision it used to be backed by gold. So basically, currency's value used to be tied to gold. That's the US dollar's currency. The US dollar's value used to be tied to gold. So the more gold you have, the more value the dollar has. But after the Bretton Woods, it was depegged technically. The United States didn't need to have a lot of gold for its currency to be valuable. And this led to the ability of the central bank, which is the Federal Reserve, to be able to print currency out of thin air. However, today the US dollar seems like the reserve currency. It seems like the value currency of the world, such that the country that has more US dollar has a lot of value. That's why I see investors from everywhere, from Saudi, from China, from Malaysia, from everywhere, from Australia, all going to buy US Treasury bills and bonds, Treasury notes. They all want to put their money in dollar. They all want a portion of the dollar. So, and all of this transaction facilitates foreign exchange because to buy dollar, you have to use another currency, and you can do this with any country. There are people who buy the Bahrain dinar, the Oman currency, because it's a very stable currency. It's pegged to oil, sort of pegged to oil. It's very stable. There is an idea that if you buy those currencies, the value of the currency doesn't drop sporadically. So there are people who do these things, really not for profit. Sometimes just to peg value, just to keep value in place. So these are some of the ideas that go on in people's minds when they exchange currency. So we have hedge funds. Hedge funds actually speculate and they actually do try to make money. However, the title hedge funds is supposed to be an hedging institution, but these days the hedge fund industry has transformed and now they try to make money. They look into alternate investments, things that, yeah, the average person cannot invest in. And hedge funds usually have a very high barrier to entry. There is something called a verified investor. So not everybody can invest in an hedge fund. And yeah, so we have money transfer companies. They facilitate transfer of money from one country to another. This involves this In this category, banks are there definitely. We also have fintech companies, any company that does the exchange of currency from one country to another. We have Western Union, MoneyGram. Currently, we have apps like Gray, Clever. There's Wise, there's Lemfi, Lemonade, Lemfi. There's so many of them. Any app that does the facilitation of transfer of one currency to another, it's a money transfer company, and they also involve in the exchange of currencies. The other category I didn't put here is retail traders. So retail traders is me and you and small scale traders that try to actually profit from the market. So we make up a very, 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 very small minority of the market. And market moves on volume, moves on liquidity. So if you put all retail traders together, the impact of our trading does not even reflect in the international markets. It barely reflects. And so this is one of the other reasons why people always tell you that your strategy doesn't move the market. Your strategy is only an interpretation of how you view the market. Your strategy is not what moves the market because even if it did, you don't have the volume to move the market because market sure does move on volume. And so yeah, those are the categories of players. We can say players in the market. We have commercial banks, we have corporations, we have central banks, we have hedge funds, we have money transfer companies. One key point I would like you to remember is not everybody is in the market to make money. For the majority of transactions are just exchanges to another currency for a certain purpose. After that, we have organizations like hedge funds and commercial banks and central banks that hold it for reserve. They hold other currencies as a reserve. And if you go to Central Bank of Nigeria or Kenya or South Africa, you're going to find stash of foreign currencies there. And not to be surprised, you will find all types of foreign currencies there. The South African currency will be there, the Omani currency will be there, Australian dollar, pounds, euro, the US dollar for sure. Like no surprise, like any country that is seen as a country of interest, a country of value, their currency is usually valuable most because it's stable. So you see a lot of organizations or corporations and banks trying to hold those currencies because in the case of anything, if you have Saudi Arabian Riyadh and there is tension in the US and the US value is dropping, like the probability or the possibility of all currencies getting bad at the same time is very rare. So it just gives value in some sense, and the more money you have in because it's a safety bracket. Also, gold is a safety bracket. They call them safe haven assets. So they are safe haven currencies too. One very ideal safe haven currency is the Japanese yen. Another safe haven currency is the Swiss franc. The reason why these currencies are safe haven is because the the country, that's Japan and Switzerland in this case, they usually have net zero interest, which means that you don't really lose or gain anything from holding the currency. You don't lose, you don't gain, and the country is valuable. The economy is valuable and stable. So they are safe haven because when there's uncertainty in the world, the US faces a lot of uncertainty. Trump, oil, like so many things. So when there's uncertainty in the world, it doesn't make sense to hold rand, or it doesn't make sense to hold shillings or naira or Australian dollar. Just buy CHF because Switzerland doesn't participate in a lot of the world politics. It's just quiet and gentle. Japan, albeit participates, but the currency would remain valuable because there's very little interest. In fact, the Japanese yen at some point had negative interest, which means you get paid for using the currency. You get paid for loaning the Japanese yen, unlike other currencies, whereby if you loan those currencies, you have to pay. So these are some of the ideas that are important for you to have. This topic is it's not one that would be necessary. You won't go about thinking every day that it does not directly influence how you trade or how to make money, but it's important to understand that look, there's so many players in this market. It's not just me. There are hidden players too. There are brokers, there are liquidity providers, there are hidden players everywhere. Anywhere there's money, you can expect to find all manner of because money the truth is money runs the world. Like everything, 99% of everything that exists in the world today, maybe not so 100 years ago, but 99% of everything that exists in the world today, even if you're learning to be a bricklayer or a carpenter, or you're learning to make clothes, or you're learning to make watches, or you are studying graphic design, everything comes back to money. So you can expect that in the business of money itself, now think of how many there are lawyers, there are there are technicians, there are engineers, there are software. Like everybody is involved in the money business. So there's a lot of players, but these are main players. These are main players, and I would not also discount the presence of the retail trader in this list. So I just thought I'll share this and hope it's insightful. Hope you gain something. Again, I like to explain these things because it's necessary for us to just get an idea of what all of this is about. And don't discount this knowledge. Sometimes you kind of just it's more knowledge usually sparks ideas like, oh, this I now realize this. So let's run through it again. So we have governments. Government I should mention. So but government would participate in government will participate through the central bank. So that's another thing. So we have government, market movers that set economic goals and shake the markets with political decisions. Commercial banks, private credit organizations that do most of the global currency trading through electronic networks. We have central banks, Forex trendsetters that control the money supply in a given economy. Corporations, active hedgers seeking to protect their profit through buying, selling of currency. We have investment funds, highly skilled investors who have a broader selection of investment opportunities. Traders, risk-taking individuals who come to the FX market to earn money as fast as possible, which is the truth. Most traders are in for less than 3 months. So yeah, I hope this is insightful. If you have any questions, if you have any ideas, shoot them to me. I will be ready to answer you. And yes, I hope you have a great time. Until the next lecture, I wish you all peace and good luck.